Hello guys, this is Daniel. I wanted to make a video today pretty much to show you how choosing the right float, it's either beneficial or it's not beneficial, depending on whether you're trying to looking to go long or going short. Now, I know you guys know that smaller floats tend to spike more. They tend to be more aggressive, more volatile. But now I want to show you in Excel how that looks. So pretty much all of this data right here, all of this data I record meets 5 criteria. That 5 criteria is at right at 9:25 a.m. That's 5 minutes before market opens. At 9:25 a.m., if it has at least 1 million shares traded, it could be any market cap, any float size, and then most importantly, it needs at least a 5% gap up. If it meets this criteria, I record it. So all of this information right here, it's for all of 2003. Now, if you can see the column here in the middle, it's for the float. I'm gonna put the smallest. I'm gonna sort it by having the smallest float on top. Actually, I'm going to do it the other way. I'm going to sort it by the spike. Once again, the way I record the spike, or what I consider as the spike, is pretty much how much does it open from open until the end of the day. How much did it spike? So if I click here, this is one example. If you go to the highest point, you're going to see it spiked 24.46. So then this is what I would consider a spike down. You usually look at the lowest point. In this case is 6.27. For the prior day, just for as an example, for the prior day, it spiked. I start here right at the beginning, opening. It spiked up approximately 20. It spiked down approximately 34%. So that's pretty much what I consider to be a spike. So I'm going to sort it by spike. With the largest on the top. As you can see, these spike very much. 400, 300%, 200s, 100s. Anything that is green is anything that has spiked over 70%. Now, just so it's easier on the eyes, I'm going to highlight anything that has spiked over 50. I'm going to highlight it this nice color right here, purple. Okay, so anything over 70% is green. Anything in between 70 and 50 is like this purple color right here. So now I'm going to sort it by float. Okay, float. Now these don't have a float mostly because they're IPOs, or the float was not picked up by the scanner that I use, so I put a question mark. But as you can see here, the higher the float, you don't see them spiking too much. Most of the ones that spike are usually the smaller floats. So if I sort it by having the smaller floats on top, you're gonna see that there's a lot 70s, 70s, 70s. This is 88, by the way, but it's over 70. That's why it's highlighted green. 88, 73, 78, 7, 298. You have some 50s, 70s, 50s, 70s, 70s, a lot of 70s, more 70s, 50s. That's because you're in a 1 million float. You can see they're all bunched up because these smaller flows, they tend to be very, very volatile. Now, if we scroll all the way towards the bottom as we get bigger and bigger floats, now in 16s, 17s, we go even further. You see how, did you notice that? Did you notice how it started you don't see that many spikes? You're still going to have spikes. You will still have spikes over 50, but they're not going to be as prevalent. You're not going to have that many. In this case, right now we're at the 40s float, 40s, 50 float. Now you don't see that many, and you will see some because I always see them, some that have higher floats and they still spike 100 or over 200%. But you won't see them as much. Almost nothing reaches 50%, if you can see right here. None of them are highlighted. Not a single one is highlighted. We're in the 70s float, 80s float, 90s, 100 float. The higher the float, the less it tends to spike. None of these reach 50. Here's one that reached 70. Like I said, you will have some. You will have some that they tend to spike over 50%, even over 100 or even more. I've seen it happen. However, those are rare. So if you're trying to go long, this is, even though you're already new, it's important to see it in Excel. So you know that the higher the float, the less chances that it's going to spike, or if it does spike, that it's going to have those beautiful, very long, aggressive spikes. And conversely to that, if you're looking to go short, your best bet, if you want to protect yourself from a spike up, your best bet is to bet on anything that has a float higher than 40 million, 50 million. Now, I know a lot of you guys already knew this, but it's always very beneficial to see it in Excel. Once again, you see these are smaller floats. There's a lot of 70s, a lot of 70s, a lot of 50s. And then towards the end, the very high floats, you don't see that many. The reason you see these right here, like as I said, is because I was not able to get a float for this particular record. It usually is like an IPO, or sometimes just the scanner that I use. It does not provide this information. But you could do the same with with market cap. I mean, this is incredible. Not just knowing intuitively, but seeing it with hard data in Excel, so you could see it. It's very, very beneficial. This is very, very good information. Now I'm gonna sort it by cap, which is the other way. It almost goes hand in hand when float. The smaller the cap, the bigger the spike. As you can see, the market cap right here. This is my cap column. The market cap. These are very small caps, very small market, very small businesses. They're not valued at very, very highly. These are very small, therefore they're very volatile. To no surprise, you can see how they usually spike easily, 70s, 50s, 70s, 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 50s, 70s. Look at all of this. This is a lot of 70s right here. And we're only at the 3 million market cap. These are very small companies. Then you keep going to the 4, to the 5, 5, 5, 7s, 8 market cap, 10 market cap. You still see some 50s, some 70s. And the more, I think it's over, let's see. The more you go, let's see when it stops. There's a lot of spikes right here around the 20, 24 market caps. There's more 70s, 50s, 70s, 50s. Let's go more. Okay, did you notice that? Did you see that? There's less. There's starting to be less and less spikes. It's around the 60 market cap, 70 market cap. You start seeing a little bit less. There's nothing right here. There's nothing right here. Now we are at 100 market cap. There's only 2 at the beginning, 150, 170, 170, 170. There's less and less. Okay, there was a small group right there. But for the most part, you see all of this, 300 market cap. There's not a lot of spikes. Not a lot of them spike. The majority of them, they tend to spike with the smaller market cap numbers. So this is a great tool. If you're deciding to go long, or you're deciding to be a short seller, it really helps, picking the right cap, the right float. You have seen me in other videos explaining more or less my observations for the slope, for the deviation, for the extended, for the gap up. I mean, I collect a lot of information. If you guys notice here, I have a lot of columns that are hidden because I just collect way too much information. But the more information you have, you can make better decisions in order to improve your odds. It's not gonna, of course, it's not going to perfectly make or break you, but it's really gonna give you an edge. It's gonna give you a hand. It's a great tool. It's a great tool to have. And yeah, so let me know what you guys think. If you have any comments, questions, or any advice for me, feel free to let me know. All right. Thank you guys.